Good morning, I'm Zev Fema, research analyst for ActionAlertsPLUS, here on the floor of the New York Stock Exchange with senior portfolio analyst Jeff Marks. Jim and Catherine are out today. Jeff, let's dive right into it. Yesterday was Merger Monday. We had Eldorado and Caesars. Today, the mergers are continuing. We've got AbbVie paying a little over $188 a share for a $63 billion takeover of Allergan. This represents basically a 45% premium to yesterday's closing price for Allergan. Jeff, did AbbVie overpay?
It's an interesting question because, I mean, if you go back to like the story of Allergan, right, this thing has been on a pretty much a consistent downtrend ever since the Pfizer deal.
Yeah, we were there for some of it.
Yes, we were. And you know, there was always some type of talk of, is Brett Saunders going to break up the company? How is he going to unlock value? And a lot of people thought a split would be the most logical, would be the first choice. I never really thought it was feasible because Botox has such a strong presence in both the therapeutics business and the aesthetics business. But to go back to your question, did they overpay? I mean, Allergan was at 180, as you mentioned. It was at 180 back in October. So I don't think AbbVie overpaid. Now, AbbVie's getting crushed today. Clearly, investors don't like the news.
I mean, a 45% premium is a lot, right? Usually we see 20%, but it is a depressed stock.
So this is how I kind of look at it. You know, and I just kind of, I went over the press release. I kind of like the accretion, the earnings accretion that they laid out, the synergies that they laid out, the cash flow of the new company. But when you have one stock, AbbVie, which was in a downtrend, and Allergan, which was in a downtrend for a while, putting them together, I think there's going to be some skepticism there. So I think that's what you're seeing today in AbbVie. But again, I think the numbers kind of create a compelling case, but we'll have to wait and see there.
And I'm sure it'll be interesting to see what else happens in the space. I saw some notes talking about potential Merck takeover, so we'll have to.
Yeah, I mean, M&A in pharmaceuticals right now is huge. I think this is like the third, I would say, mega deal of the year, and there's been some smaller deals along the way. So it's really been a hot month for M&A activity.
Absolutely. Yeah. And just real quick, Kevin Curran is covering AbbVie and Allergan over at Real Money, as it is our stock of the day, so be sure to get over there and check it out. Jeff, let's switch it up a little bit. Micron is set to report later today. There's a lot going on with Micron, with the semis in general, but what would you say is the most important thing for investors to pay attention to on the Micron call?
Yeah, so I think at this point it's pretty well understood that Micron's earnings might be subpar, right? So I think what investors are going to be paying most attention to is just whatever commentary they can give on the future of DRAM pricing as well as inventory levels, which will kind of set that tone. You know, heading into the year, a lot of people were saying, okay, we might see this inflection in DRAM pricing come, you know, as we exit 2019 into the first half of 2020. Now people are pushing those targets out just because of what's going on between trade and Huawei, just a major you know, user of DRAM pricing kind of getting restricted there. So we'll have to see how that factors into Micron's guidance. That's really the key.
Right, and also with guidance, there's an inventory glut going on, and because you did mention Huawei, people should know over the past couple quarters, it has represented roughly 13% of Micron's business. So again, just back to trade, we're watching G20. Jeff, let's switch it up one more time. So Warren Buffett's in the news again today. He's denying it, but there are reports that there's some tension between George Lemon, the co-founder of 3G, and Buffett regarding you know, what's going on with Kraft. Forgetting that for a second though. Now, Warren Buffett has said in the past that he overpaid for Kraft. So what I want to ask is a little bit away from what is happening specifically with Kraft, but just kind of a teaching lesson. How, you know, what are some signs that you might be overpaying for a stock?
Yeah, it's a good question. So I would say first, if the catalyst already happened, catalyst being like an event that could really sway the way that the stock is kind of perceived, and it could be earnings, it could be corporate M&A, something like that. If that catalyst event already happened in the past, you know, you're in on the tougher money now, I should say.
In other words, don't rush into Allergan right now because we kind of got the catalyst.
Yeah, I mean, the 188 price, what was it, the 180 deal? Yeah, I mean, that was such a win for Brett Saunders. But anyway, yeah, I would say look for the catalyst. If it already happened, you may want to look for something else that has an upcoming catalyst. Second, if it's just become a crowded trade, and I think a perfect example is there, is look at all the rush of IPOs that are going on right now. And that's not to say you can't make money in that scenario, because people were making money in Tilray all the way up to 300, you know, through that run, and people were making money in Beyond Meat up into that run. But again, if it's just become a crowded trade, again, the easy money's been made, and now you might be at risk at overpaying. And then third, I would say look out for stocks that are going up, maybe not on on fundamentals, but more of like the sector characteristics. So right now we're seeing really heavy sector rotations into some really safety areas, and a lot of these, I'll say like the consumer staple stocks, for instance, a lot of these multiples are getting pretty elevated versus historical averages. So again,
sign of a crowded trade.
Yeah, so similar vein. So again, and that's not to say you still can't make money in these areas, but it just might be a sign you might be paying a little too much.
Right, and so that kind of sounds like it's coming also back to efficient market hypothesis. Basically, we try and make money off of speculating on things that maybe others aren't seeing and stuff. And we talk crowded trade, it's pretty much saying, listen, everyone sees it. We're not really bringing much to the table. So, not that you can't make money there, but it's something to keep in mind.
Exactly.
All right, Jeff, we are out of time. For those watching on TheStreet.com or the Facebook Live page, we're about to head over to our Action Alerts Plus members only call. We're going to be diving in to a ton of topics, including what to watch out for ahead of this. Diving into a ton of topics, including Shopify downgrade and answering a bunch of member questions. So be sure to get over there and check it out. Thank you.